Hi, this is Dave, and welcome to the weekly market recap closing out the week for Friday, November the 22nd, 2013. So the big news this week, let's start out with the Dow futures on the daily chart as we usually do. And the big news this week is that the Dow closed above 16,000 for the first time in history. So we are at all new time highs in the market. So this is this is pretty, I don't want to say monumental, but it's not unexpected. However, I'm sure it's probably caught a lot of people at surprise seeing the Dow at new all-time highs and seeing the other indices at new all-time highs while the economy isn't really improving. So the market is always looking forward. Market's always looking forward, months ahead of time. So this is not uncommon throughout history to see, the economy doesn't look like it's really doing that well, but the market is actually, 6 months to a year ahead of, what's happening on the street kind of thing, for lack of a better description. So Dow all-time new highs. We're still in an uptrend. There's really no reason to fight. This move. I hear a lot of people, I hear a lot of people that have been in the markets on different financial networks and stuff like that. I don't watch a lot of this stuff, but one person in particular, I won't mention any names, has been talking about, you got to short all of these breaks to new high and sell strength. And, I really don't agree with that. I mean, why would you, short strength? I could see selling, your long positions into strength and booking profits, but why would you actually want to, catch a reverse falling knife if the market is trending higher? You don't really do well fighting against the trend. So, looking at the market here, the market's trending higher. So, for people to come out and say, well, this is overbought, you got to sell it, that just doesn't make any sense to me. So it is. I will admit it is extremely overbought here, but if you look at like the slow stochastics here, and you can see them enter into this overbought situation, massively overbought situation, and you look at the MACD, it's in the top portion of its oscillator range, and it's hugely overbought. But having said that, when the market really hits a good trend and a strong trend, these can stay overbought for a long period of time. So that in itself isn't a reason to sell the market, in my opinion. And, having said that, I always like to look for the pullbacks. I think pullbacks make sense. And it's actually been really hard to buy this market for the simple reason that the pullbacks have been so shallow. For example, last week and the week before, you've had pullbacks to the 8-period exponential moving average. That's this yellow, rising yellow line. You had a pullback to the 21 exponential moving average, but on the days that it happened, it didn't actually touch the moving average. The moving average has kind of moved upwards as price action is ascended. On those days, it was actually, fairly far away from the 21-period moving average. But if you look at these pullbacks, they've been very shallow. Even the pullback on, let's see, I guess this would have been Wednesday. That pullback only touched the 8-period exponential moving average, is very shallow. And now we're closing, on the highs at all-time highs. So, I'm certainly not trying to fight this trend. I've been buying, pullbacks in things that look interesting on, a 1 to 5 day basis, and, just mini swing trades and things of that nature. And, admittedly, it's hard to buy these pullbacks, but, you just can't really fight the trend. So having said that, let me just move on. We are overbought. This might not be the greatest area, just to buy in. But having said that, if we could get even a half decent pullback down to the 21 or, to this rising trend line here, this accelerated sort of trend line, I wouldn't really consider this a sustainable trend line. It's, probably like 60, 70 degrees or something like that in terms of its angle. But if we could get some sort of a decent pullback, that would, make me interested in looking at, the long side a little bit closer. That being said, I have been talking about these targets somewhere around 16,400, 16,500. That's where I personally think the Dow is going to go. And then once it gets there, I'm really not sure. I'm really not sure what to do. So I'm actually kind of looking for a grind into, 16.4, 16.5, and then we'll have to reassess. It's not, I'm not saying it's necessarily going to be a straight line up there. Although this has been a fairly straight line move. But we could have, any kind of pullback in there, but that's essentially where I'm looking for the market to eventually go, somewhere into this zone, somewhere up here, even as high as 16,700, but call it anywhere between 16,400 to 16,700. That's sort of what I'm looking at. Okay, so having said that, I think I've beat that to death. Let's take a look at the S&P futures. The S&P futures are following suit. They're massively overbought. You can actually even see some divergences in the MACD and in momentum versus the price action. So we do have some divergences coming in, which is, a sign to be cautious. But having said that, the trend is still higher, and I'm not really interested in fighting that trend. NASDAQ, same situation. You can see actually a pretty big divergence here in the MACD and in the stochastics versus the price action of the NASDAQ futures. So that is a bit of a red flag. But having said that, I think we're probably going to print some higher prices, not necessarily, going into Monday or Tuesday. Those could be pullback days. You never know what's going to happen over the next few days. But I mean, in the short term, I think we're going to print higher prices eventually over the next, 1 to 2 months. So let's take a look at the transports just to see, if they're confirming. Transports are not at all-time highs. You can see they're not at all-time highs. And they're not even at all-time closing highs, but they are sort of, trending higher. They're starting to look a little bit divergent. So I'm just going to take a look at, let's take a look at a little bit of a different angle today. Let's look at the seasonal tendencies. Let's look at the seasonal tendencies of, for example, the DIA. So the DIA, if you look at the seasonal tendency, the DIA tracks the Dow. This is actually a tradable ETF that you can use to trade the Dow. And if you look at where we are, let me just draw a line here. If you look at where we are this week, this is the current week. These are weekly bars now. This is the current week, and this is the seasonal tendency over the last 5 years. It's a seasonal average. And you can see that even though we're overbought, according to the, the 5-year seasonal tendency, we usually come into a low somewhere, into the second or third week into November, and then we print higher prices going into, the end of December. So, and then you can see January, starts to sell off a little bit into February, March, and then, we find another seasonal low. This would be January 2000. Let me just be clear here. This would be this is looking at January, so we'd be looking kind of like January 2014, and this is, December 2013. So if you look at this, I mean, it's sort of like a guideline. It's not, obviously, things don't exactly repeat themselves year over year, but we're just kind of looking at, what is a seasonal average tendency over the last 5 years. So I'm sort of looking at this and saying, well, even though the market is overbought, this is indicating, that we usually have a seasonal low coming in around this time, this week. And even though the chart doesn't look the same, there's been a bit of a shift here, but this could actually be the low, and then we could go much higher. So I've still got those targets in the Dow. I think this all is kind of coming together and making sense. It's not to say that we couldn't get a pullback before we move higher. But, looking at the seasonal tendency and looking at some of the targets that I'm looking at based on my own technical work, I'm pretty comfortable with my opinion that I believe the market's still going to go a little bit higher into Christmas potentially. So having said that, You might be able to hear my daughter in the background there making some noise. She's very cute. Let's take a look at the SPY, which tracks the S&P futures, and you can see, same sort of situation there with the seasonal tendency as would be expected. Let's look at the Qs, which track the Nasdaq. Same sort of story there. Okay, so let me flip over to the traditional charts again, and we can sort of move forward with some of the other instruments that we normally look at. Let's take a look at the dollar index. So the dollar index has been a little bit tough. I don't want to say tough, but a little bit confusing, because it's sort of stuck around this major level around 80, 85, let's call it 80, 86. And it's just been kind of bobbing up and down around that level. So I don't really have a clear indication on that, although it is struggling to get above resistance, and it is in a downtrend. So to me, momentum is going lower, although the MACD is kind of divergent, right? So it's a little bit, as long as we stay below that trend line, as long as we stay below 80, 86, I think there's the potential for either downwards or sideways action. If we get above this trend line, then that's really gonna flip the script on that analysis. So let's take a look at the euro. So the euro is looking pretty strong here, on a relative basis. We did not get this scenario take place here where we said, if this scenario happened, where it broke this swing point, then that would put us on the bearish side of the euro. In fact, what we did was we broke this trend line, and we just sort of, now we put in a higher high, a higher low, a higher high, and we're pushing back up to the high side. So that bodes well for the euro, at least in the short term. And I think we would have to look at, where could the euro go? Well, the euro could come back and retest those highs, certainly, or we could look at, that high to low. We're coming into a 50% retracement. 61.8% retracement would bring us into 36.26, and we could definitely come into 36.83, which is this fairly key level up above. So let's take a look at, I don't really have a lot on those currencies, but you can see that, you still got some room for momentum to go higher. So a test of those levels definitely looks feasible and or possible. Let's take a look at the USD CAD. USD CAD is looking more bullish than bearish. We did break out of this sort of triangle, and you can see we printed a pretty negative candle there. That candle there is what I call a distribution candle. Some people call it a hanging man, where you push up, you print new highs, and then you close close to the lows. So that is indicative of a potential short-term pullback. Now, having said that, the pullback doesn't necessarily have to be a deep pullback. It could, pull back to the top of the trend line. It could pull back to the 8 period, 21 period. You don't really know, but we're still printing positive momentum here in some of our momentum indicators. And from a pattern perspective, this is a breakout. What I would consider a breakout continuation pattern, and some of these higher levels are still in play, anywhere from $1.06 to $1.09, anywhere in these areas. That's sort of what I'm looking at. This has been the long-term analysis. Been talking about this for several weeks, so that hasn't really changed. The only thing that has changed is that we were trading in the top 1/3 of this sort of wedge. I'll call it a wedge instead of a triangle. It looks more like a wedge. And we finally have sort of broken out there, although not decisively. Let's take a look at the crude oil. So I think the crude oil is trying to find a bottom here, and I think it may have actually have accomplished that around $94 a barrel on average. You can see that we went a little bit below it, but you can see these lows coming in, and then we had a really strong push on Thursday up to the 21 exponential moving average, and now we're just sort of we had an inside day on Friday. We've had momentum. We've had a sort of a momentum shift here. You can see it broke this downtrend line, and now we're pushing back up to the high side. We're still net negative on my trending indicator, but I think that we could push up maybe a little bit higher into that trend line. You can see the MACD has crossed over to the high side. It is still below the zero line, So we'll probably have some zero line indicator resistance there. When price pushes higher, we'll probably have some resistance where the MACD touches the zero line. And, I think I personally think we put in a short-term bottom. How high we'll go, I don't really know. I think we'll probably test the top of that trend line, and we may even push through that trend line and make it all the way back, to $100 to $101 a barrel. That's sort of what I'm looking at. If you look at another sort of instrument that tracks that, the XOP, this is something that I'm looking at. So you can see the XOP is broken above that trend line. The XOP tracks the it's the Spider S&P oil and gas exploration. So it's not entirely, crude oil related, but it's, sort of related to the industry there. And you can see that, we're trending higher here in the XOP, and we broke above that trend line. And it wasn't like a decisive break, although we did put in a hammer as we broke above that trend line. So that's something that I'm looking at in terms of a little bit of collaboration. In terms of what the crude oil is doing, you can see that we're holding the MACD zero line here, and momentum is starting to shift back up to the high side. So that bodes well for those instruments. Let's take a look at the natural gas. Now, admittedly, I am not in the natural gas trade anymore in the UNG, and you can see that I was sort of, wouldn't say chickened out, but I was looking at it on this day, and it made its move. It retested, and it made its move into this trend line. And I sort of thought, like it's finding some resistance there. It doesn't seem to want to push through there, even though at the time we had the potential for momentum to keep going to the high side. But you can see we had a pretty big 2-day pullback, and now we're pushing back through there. So the original analysis of looking for some of these higher levels seems to be in play. 384, 384.8. That seems to be in play. We broke above this trend line here, and we're just sort of moving up there. I think now we're over bottom momentum, and I think the move is. It may go a little bit higher, but I think from an analysis standpoint, the move is substantially over. I'm going to wait to see how this sets up for to see what it might do next. I don't really have anything else on it at this point in time. Let's take a look at some of the metals. So the metals, I thought, were finding some sort of a bottom here, and let me just delete some of these levels, and you can see that. We failed this support level after we had a bit of a bounce there, but it looks now in hindsight a little bit more like a dead cat bounce. And we had a little bit of a bounce here. I was thinking that this level might hold, and then all of a sudden, boom, we had we had a little bit of sideways action, then a huge down move, and now we're finding resistance around $1,251 an ounce. So, we've got, momentum is a little bit overdone. We're actually putting in some positive divergences there. MACD looks lower, but, in terms of momentum, we look like we've sort of bottomed out there. So I think the major support are going to be these lows. And I think that, we could possibly just put in this could be a swing point low, looking to put in, another swing point high. I really think this industry is not this industry, but the metals, there's not really a lot of attention on the metals right now, and they're just not. I don't think there's really a lot of people participating in these moves, and that's why I think they're a little bit, they're just not really that active right now, and they're just not really going anywhere. So if you look back over history, this is really starting to look like a head and shoulders pattern with a neckline somewhere around there. Not to say that that's really going to follow through all the way to the downside, but it does look like a viable pattern. And then having said that, I just don't think, there's just a lot of sideways action in this area. There's a lot of congestion. So it'll be interesting to see what happens. If we fail this level, I'd be looking at a retest of these lows. And then if we really get something going, then what I'd be looking at is I'd be looking at, basically traveling the distance of, this pattern here to the downside off of the break of a neckline. So, $1,084 an ounce is a possibility. But having said that, I think we could bounce before we actually move lower. So, I really don't have a lot for gold. I'm not really interested in trading it. I don't think there's a lot of activity in it, but it does look more negative than it does positive at this point in time. So let's take a look at silver. Silver, the same thing. It broke this trend line. It's just sort of bleeding lower every day. It looks, but momentum is starting to bottom. Having said that, if we really get a trend going to the downside, that could stay, oversold for quite a long period of time. So don't really have a lot on that either. It's just not really a lot going on there. I think if you were looking for something, like if silver were to get something going, you'd want to at least see a break of a trend line like that. And let's take a look at copper. So, copper's a little bit divergent from the other metals. You can see here, it's starting to break momentum back up to the high side. It did break this sort of wedge pattern, and now it's coming right back up. So you've got some divergences going on there, and the question is, is copper sort of giving you an indication that maybe the other metals are gonna catch a bid and bounce back up to the high side off of an sold situation? I really don't know. To be honest with you, I think there's better markets to look at than these. So let's move on to let's see, what markets haven't we covered? The U.S. bonds. So here's the 30-year bonds. It looks like if you ask me, this to me looks like we printed a divergence. So you've got a lower low here, and you've got a lower high in momentum, and that could essentially bode for higher prices in the bonds. Having said that, I think we need to get above this trend line in order to get anything going. So at this point in time, it's just sort of what it is. If it gets above that trend line, that would put me more on the bullish side of the bonds than on the bearish side right now. I just think it's really consolidating. Let's see where this Fibonacci retracement potentially came in. Here's the low, here's the high. We stayed above the 78.6, and we sort of closed back above the 61.8, although on an intraday basis we came below it. So this is sort of looking like, we've got some support in this area. We've got a positive divergence. So we could be seeing a bit of a higher bounce in the bonds, I guess. Let's look at the 10-year. And the 10-year, same sort of story. This could be a potential. I think what we'd need to see here, let me just extend this right. We need to see, like, if this is going to be a higher low, a break of that trend line to see if we can get anything going back up to the high side. You do sort of have this double bottom in place here, and, this sort of cup pattern, where this could be like a cup with handle kind of pattern. At this point in time, it's too early to tell. Let's look at the TNX.X, which is the interest rate futures, and they look like they're positive as well. So I really don't understand completely what's going on here in the bonds. You've got that sort of down move there, that pullback, and you've got the opposite happening there. But which one is going to win out? I don't know. I really don't know at this point in time. I've thought that interest rates need to go higher for quite a while, but you can't fight the force of the Fed. They've got a huge program in place, and they've been trying to keep interest rates low for obvious reasons. I think that the main risk to the economy in their eyes is probably deflation. They can't really control deflationary pressures, so they want to keep inflation. They want to keep things, prices higher, prices going higher. They want to keep, some sort of inflationary pressures going, because they can control that better than a deflationary environment. Deflationary environments can get pretty ugly. So let's just recap. So we're looking at, if we look at, a recap of what we looked at, the stock indices are at new all-time highs. Oil looks like it's trying to bottom. The interest rates and bonds look a little bit confusing. The natural gas looks like it's sort of come up to some of those targets, and we'll have to wait and see what happens there. The metals look more negative than than positive, although there's some sort of divergences going on there with copper, what copper is doing versus what gold and silver are doing. So I think the theme for next week is just to see. I think money's really looking at the stock market right now, and I think that I think stocks are going to go higher until they don't. So that's sort of what I'm focusing on in a day-to-day basis. I'm looking at a couple of things that are interesting. I reviewed a couple of stocks last week. This is Amgen, Gilead Sciences. This one is doing well. This one is doing really well. This was another stock that I was looking at, ILMN, and you can see here it just started looking at it after this pullback, and it just had a crazy move back up to the high side. So there's some stocks that are really that are not only performing compared to the market, some of them are outperforming the market, and I think that's really where a lot of participants, in my opinion, I think where some of the money is focused right now is on some of these stocks that are performing well. I think a lot of the other, the metals and stuff like that, they're sort of dead right now. There's not really a lot of focus on them right now in terms of trading activity. So that's sort of where I'm focusing my time and energy. I'm looking at, trying to look at stocks that are maybe doing better than the market because the market is doing so well right now, the stock indices, and just focusing on that. So I hope that helps. A little bit long-winded today. I apologize, but we'll look forward to seeing you at an upcoming meeting, which I'll be announcing soon. Stay tuned for that. And I'll look forward to seeing you at an upcoming video update. So good trading, good investing, and be well and be safe in the markets. All the best.